So today we'll see what are mutual funds and types of mutual funds. So what are mutual funds? So mutual funds are basically like, I'll take an example that if you go in the market, in the stock market, right, and if you buy one share or two shares, then there'll be a risk, like if one share goes down and along with that the second share too goes down, then it will be an overall risk in your portfolio. Or if you only buy one share and it goes down, then it directly affects your investment negatively, right? And what fund managers do in mutual fund is they invest in a basket of shares. Like if one share goes down and if like two other shares go up, then it like diversifies your risk and reduces your risk. Or you may also be in positive. So that's basically the mutual funds. So that is basically the function of the mutual funds, we can say, right? And today we'll see what are the types of mutual funds. So types of mutual funds will classify types of mutual funds. So basically the classification will be as per the asset class. So that will basically be equity mutual fund, debt mutual fund, liquid fund, gold fund, and hybrid fund. So first we'll see what is equity mutual fund. So equity mutual fund, equity fund or mutual fund, as the name suggests, it the mutual fund, the AMC, basically invests in the equity shares that are listed in the stock market, like public limited companies. So it will invest in that fund. Like there will be many other there will be many types of equity funds, like large cap funds that basically invests in large cap companies that are specified as per SEBI, or you can say big companies like Reliance, SBI, HDFC, TCS. So that will basically cover large cap funds. And then there'll be small cap funds like small companies, and mid cap funds like mid cap companies. So I gave you just an example, and there are many more many more classifications can be done in the equity fund. And next we'll see what are debt funds. So debt funds are basically like the companies or the governments, or first let us take companies only. So companies issue debentures when they are in need of money, and they give you the interest, right? So you buy the debentures from the company and you get the interest from them. So the interest duration, like will it be monthly, will it be quarterly, or will it be yearly, will be specified on the bond, right? On the bond or the the certificate of debenture. So it will be specified on that interest rate, right? And next, debt funds will be like governments. You will say that how can you say governments? There is only one government, that is the central government, but you forgot that there are also state governments, and they are also in need of money, right? So they will also issue debentures, and there will be specific schemes that will be related to the like state government or the central government securities. So the mutual fund schemes will be investing in that, and like in a basket of securities, say state government securities or central government securities, and they'll be investing in that basket, and they'll be giving you the returns, right? So that will be debt funds. And third one will be debt funds. We did equity, we did debt, and the third one will be liquid funds. So liquid funds, as the name suggests, is basically liquid. Like they invest in basically treasury bond, then called certificate of deposit, commercial papers. So all these commercial papers, certificate of deposit, treasury bills are basically related to the government, RBI, and also between transaction between different banks. So whenever the banks are in need of money, they issue the securities to a government, to another bank, right? So let us say that SBI is in need of money, or IndusInd Bank is in need of money, and it approaches SBI to to provide them short-term funds. So IndusInd Bank will issue a debenture or a bond to SBI, and SBI in exchange of that will provide the funds to them, and that bond will carry obviously an interest component in that. Okay, so that is that. And yeah, so these are the basically short-term fund. It will be a short-term like weekly or fortnightly. Fortnightly is basically 15 days, right? So it will be that. And fortnightly, weekly, and maximum duration, you can say it will be around 90 days, because there are basically short-term funds. Okay, so that will be liquid, and liquid is basically you can like T+1, the settlement is in T+1 date, and like you do the transaction today, and tomorrow you will, if you redeem the liquid funds, and like tomorrow you will get money in your account. So that is like liquid money, right? So it goes with the name only. And next we'll take gold fund. So gold fund, as the name suggests, like it is basically easy to identify. You should like see the name, and you should come to know, okay, so it might be closely related to what you think, like it's all in the name. So gold fund is basically, it invests in precious commodity called gold, precious metal, right? Invests in gold, and the price of the fund is directly related to the price of the gold, right? So it invests in that. It invests in gold fund, right? Next we'll take hybrid funds. So hybrid funds are basically, they invest not in just one asset class. Like we saw equity, we saw debt, we saw liquid, we saw gold fund. So hybrid fund basically invests in one or more asset class. Basically, like one or more, not one or more, but more than one asset class. So either it will invest in equity and debt fund. It will invest in equity and debt, like securities. It will invest either in equity or liquid funds. It will invest in equity or gold funds, gold or debt fund, liquid or debt fund, liquid or gold fund. So it depends on the the scheme document of the mutual fund. So that is how hybrid funds work. Basically, mutual fund is a product of the financial market that diversifies the risk and reduces the overall risk that is present in the financial market and investing we do in the markets, right? And there is one more thing. In types of mutual funds, we saw as per the asset class, right? We saw as per asset class. Now we'll see as per the scheme, right? So in scheme, it will be open-ended scheme, close-ended scheme, and interval scheme. So basically in open-end scheme, so let me first tell you what is the scheme. So how the scheme is launched. So in share market or in equity securities, you'll when the first time the security gets listed, when you invest for the first time in a security, or when the security gets introduced in the market, you will see the initial public offer. It is called initial public offer for a equity share or a security. Initial public offer, right? But in mutual funds, when the scheme is launched for the first time, it is called NFO. That is new fund offer, right? It's called new fund offer. And in that, when a scheme is launched, then scheme can be of the three types: open-ended, close-ended, and interval. So in open-ended scheme, the scheme is open, like you can invest anytime, and you can redeem anytime. Redemption or redeem means to sell at any time after the scheme is launched, right? So that is open-ended scheme. In close-ended scheme, there will be a fixed. I'm sorry for the sorry for the background noise, but yes, we'll continue with the learning, right? So in close-ended scheme, close-ended scheme is basically there is a fixed time period. Like the scheme will open on 1st March and the scheme will close on 7th March. So there is a specific time for entry and exit from the scheme, right? So you can enter and exit between 1st and 7th March. So after 7th March, you are locked in this. So even if you want to redeem after 7th March, you cannot redeem it because it is a lock-in period. It is a close-ended scheme, right? So it will be, for example, for a period of 5 years, 3 years, right? So that will be mentioned in the scheme document. So you can redeem only after this time period. So this is basically a close-ended scheme. Now we'll see what is interval scheme. What is interval, So interval is basically a close-ended scheme, but it has an interval. Like the scheme got launched on 1st March, it got closed on 7th March. Then after 1 year or 2 years, it depends as for the scheme document. So after 1 year or 2 years, they will again open the window to buy or sell your units. Again, open the window to buy or sell your units. So that is how the interval thing works. So if you purchase from 1st to 7th March and then the scheme got closed, then if you want to sell or if you want to buy again, then it will be again after when the time period is mentioned on the scheme document, that after 1 year or 3 years or 2 years, only in that particular time period you can buy or sell again your units which you have purchased or you want to purchase or you want to sell. So that is it. So today we saw what are mutual funds and types of mutual funds. Make it neat. Yeah, so today we saw what are mutual funds and types of mutual funds. So types we completed as per the asset class and as per the scheme. So in asset class we saw equity mutual fund, debt mutual fund, liquid funds, gold fund and hybrid fund. And in schemes we saw types of mutual fund. As per scheme we saw open-ended, close-ended and interval. Bear with my handwriting, hope so I'll try to improve it as I make more videos. Okay, thank you for watching. Thank you very much.